This video is all about a really interesting trading indicator known as the Multi Oscillator Adaptive Kernel by AlphaAlgos. It's a pretty cool tool that helps you gauge market momentum and spot potential reversals using a unique oscillator setup. We're going to dive deep into what this indicator is, how it looks on the chart, and exactly how you can use it in your trading, including a neat divergence strategy. If you happen to find value in this video, do me a favor and hit that like button down below. Let's get into it. Now, to get started with this indicator, you first of all want to head over to TradingView. That's the platform I'll be using today. If you don't have an account yet, there's a link in the video description to help you sign up. Once you're there, you'll want to load up the chart for GBP/JPY on the 15-minute time frame. That's what we'll focus on today, but keep in mind, this indicator generally works across lots of different time frames and assets, so feel free to experiment. Next, click on the Indicators button at the top, search for Multi Oscillator Adaptive Kernel, and it's going to be this one here by AlphaAlgos. Go ahead and add it to your chart. Ladies and gentlemen, this is the all-powerful Multi Oscillator Adaptive Kernel indicator. At its core, this indicator is designed to help you understand market momentum, identify the underlying trend, and spot potential overbought or oversold conditions where price might reverse. It cleverly combines signals from multiple standard oscillators like RSI and Stochastic, then smooths them out using an adaptive kernel technique to give you a clearer, less noisy picture of what the market's doing. So, let's break down what you're seeing on the screen. The first thing you might notice is that the indicator actually changes the color of your price candles. You'll see them switch between a bright teal color and a magenta color, which are tied to the momentum readings from the oscillator. Then, down in the indicator panel, you've got the main visual components. There's a fast signal line, which is that thin line bouncing around the zero level. Because it's fast, it reacts quickly to price changes and is great for gauging the immediate momentum. Above zero suggests bullish momentum, below zero suggests bearish momentum. Complementing that is the slow signal line, which looks more like a histogram or an area, also moving above and below zero. Being slower, this line helps confirm the signals from the fast line and gives you a better idea of the underlying trend direction. It basically tracks momentum too, just with a bit more smoothing. You'll also see a scale on the oscillator, centered at 0. The creator suggested using the 50 level for overextension, but I've found that the 40 level works quite well. To make this clear, let's add some horizontal lines. Just grab the horizontal line tool, place it anywhere, then double-click it. Go to Coordinates and type in 40. This gives you a visual level for when the market might be overextended to the upside. Let's do it again for the downside. Add another line, double-click, go to Coordinates, and this time type in -40. Now you've got clear zones to watch for potential exhaustion points. Next up, let's quickly peek into the indicator's settings. When you open them up, you'll see a few sections. Under Oscillator Selection, you've got options like Source, which price data the indicator uses, like close, open, etc., and lengths for different built-in oscillators like RSI, default 14, Stochastic, default 10, MFI, default 14, and CCI, default 20, though it might be off by default. For the strategy we're discussing, we're just going to stick with the default settings here, so no need to change anything unless you want to experiment later. Then there's the kernel settings section. Here you can choose the kernel type. Options like exponential, linear, or Gaussian let you tweak how the indicator smooths data. Feel free to play around with these on different charts and timeframes to see what fits your style best. You also have kernel length and sensitivity, which further allow you to adjust how responsive the indicator is. Again, more options for customization. There's also a toggle to hide or show the colored bars. I personally like seeing the colored candles, so I'm keeping that on. Finally, over in the Style tab, you can change colors and visibility. The only change I'd suggest here is maybe making that fast signal line a bit thicker, just so it stands out more clearly on the chart. Once you're done tweaking, just click OK. But before we dive into the trading strategies using this indicator, let's talk about SimpleFX, which is the forex broker that I use for trading. This is their web trading platform, and as you can see, adding an indicator to your chart is super simple. You just click on the function icon, and you're going to see a bunch of indicator options ready for selection. Whether you need the MACD, you just type that in. There you have it. If it's the EMA, there you have it. If it's the super trend, there you have it. Basically, you have indicators for trend identification, momentum analysis, volume analysis, etc. What makes this setup even better is that the charts are powered by TradingView. This means you get to enjoy the same familiar settings and robust charting features that you love, making your trading experience seamless and intuitive. Also, SimpleFX offers over 450 tradable instruments, as you can see here. But what I love the most is that they offer a first deposit bonus of up to $5,000, along with a 10% cashback. To get access to these bonuses and all the other perks, sign up to SimpleFX using the link in the video description. Alright, now back to the fun stuff. How can we actually use this multi-oscillator adaptive kernel indicator to trade? Well, the first and most straightforward way is simply to identify the market's trend and momentum. You just need to look at both the fast signal line and the slow signal histogram. If both of them are above the zero level and are colored bright teal, that's a pretty good sign that the momentum and the overall trend are bullish. Conversely, if both lines are below the zero level and colored magenta, you're likely looking at a bearish trend with bearish momentum. You can even gauge the strength of the momentum. For a bullish trend, if the fast signal line is riding above the slow signal histogram, it suggests the bullish momentum is strong and potentially increasing. But if that fast line dips inside the slow histogram area, while still above zero, it could mean the bullish momentum is weakening, even though the trend is still up. The same logic applies in reverse for bearish trends. When the fast line is below the slow histogram, and both are below zero, bearish momentum is strong. If the fast line moves up inside the slow histogram, but still below zero, bearish momentum might be fading. Now, just thinking about that, you could use this idea to help decide when to trade. For instance, maybe you only want to look for entries when the momentum is showing signs of increasing strength, and perhaps avoid taking trades when the momentum is actively decreasing. Now, for a more specific setup, let's talk about that second method using the overextension levels we marked at +40 and -40, combined with divergence. Let's walk through a bearish setup, meaning we're looking for a short position. First, you need to wait for the market to get overextended to the upside, becoming potentially overbought. Condition number 1 is seeing the slow signal histogram cross above that +40 horizontal line we added. Usually, the fast line will already be up there too, but we don't jump in just yet. Now, we start watching closely for bearish divergence. This happens when the price keeps making higher highs, but the oscillator starts making lower highs. You're looking for a clear discrepancy, maybe two distinct peaks on your price chart going up, while the corresponding two peaks on the slow signal histogram are going down, the second peak lower than the first. Once you've spotted this divergence and the slow signal histogram then crosses back below the +40 line, that's our entry trigger for a short position. You'd enter short right there. For your stop loss, you can place it just above the most recent swing high that formed during that peak. And for the take profit, a simple target could be 2 times your risk, aiming for a 1-to-2 risk-reward ratio, and then let the trade run. And naturally, for a bullish setup or a long position, you'd just flip this logic entirely. You'd wait for the slow signal histogram to cross below the -40 level, indicating an oversold condition. Then, you'd look for bullish divergence, price making lower lows while the oscillator makes higher lows, the second low higher than the first. The entry trigger comes when the slow signal histogram crosses back above the -40 line. You'd enter a long trade, place your stop loss below the recent swing low, and again, maybe aim for a take profit at twice your risk. It's a pretty neat way to potentially catch reversals after the market has stretched a bit too far and shows signs of losing steam through divergence. So, to wrap things up, the Multi Oscillator Adaptive Kernel Indicator is a versatile tool that visually represents momentum and trend direction using its fast and slow signal lines and candle coloring. It also helps identify potential reversal zones through its oscillator readings and those overextension levels we set up, especially when combined with divergence patterns. It gives you a framework for analyzing momentum strength and spotting potential exhaustion points in the market by smoothing out noise from multiple oscillators. Now, it's really important to remember, this is not financial advice. The strategy showcased in this video is made up only of indicators, and frankly, it's primarily for educational purposes to show you how this specific tool can be used. For actual trading, you should always consider adding your own analysis, whether that's price action, support and resistance levels, fundamental analysis, smart money concepts, or whatever other methods fit your trading style. Think of this indicator as one piece of the puzzle, not the whole picture. If you found value in this video and learned something new about the Multi Oscillator Adaptive Kernel indicator, please remember to leave a like. It really helps out the channel. Or even better, consider subscribing to stay tuned for more indicator breakdowns and trading ideas. Thanks so much for watching, and I'll see you in the next one.